Hello, everyone, and thank you for taking the time to review the Morgan Hill real estate market analysis for January of 2009. My name is Robert Whitelaw, and I'm a licensed real estate broker in the state of California. I'm also a member of the National Association of Realtors and a certified ePro, and I'm also the president and CEO of Whitelaw & Sons Real Estate, serving all of Silicon Valley. Now, let's go ahead and jump in and take a look at the numbers for January of 2009 from Morgan Hill. We actually have some pretty good news to report this month. I'm actually a little surprised we're seeing this particular trend, particularly in inventory, because it's been such a difficult number for us. We've just had so many homes in inventory. We've actually seen a decrease in inventory between 2008 and 2009. So that is definitely good news for our market. That's the one thing that we've been trying to make happen. A lot of other parts of the county are not experiencing this. We're fairly unique. And since we're usually the ones getting beaten up by the market first, maybe we're just one of those folks that's lucky enough to see our market recovering a little bit sooner than everyone else. But there are some other statistics that aren't so good. So let's go ahead and just look at them all. Now, as you may remember from past presentations, this is just the month of January. So we don't need to account for seasonal changes. This is all just the month of January going all the way back to 1999. And you can see that we had a steady increase from 2005 to 2008. And now, for the first January in a long time, we've seen the numbers decreasing for inventory, and that's fantastic news. Inventory is actually down 8.39%. That's 23 fewer homes in inventory in January of 2009 than in January of 2008. That gives us a grand total of 251 homes currently on the market in Morgan Hill, and I'm very happy that we're seeing that number finally heading in the right direction. Now let's go ahead and take a look at the number of homes that were added to the inventory for the month of January. So these are homes that are listed. This would be folks who listed their homes for sale in the month of January of 2009. And again, this is good news, as this number has also decreased again compared to the same time last year. That number has gone down 7.69%. So we have 6 fewer homes added to the market in Morgan Hill in January of 2009 than we had in January of 2008. That gave us a grand total of 72 homes that were listed in Morgan Hill. Now let's see if the sales numbers are as encouraging, and you can see that they are. So on every level, the statistics for January of 2009 for supply and demand numbers, so far, all good. Sales numbers are up. Actually up 125% from the same time last year. That's 10 more homes sold in January of 2009 than were sold in January of 2008, for a grand total of 18 homes sold in January. Now, just to sort of lay that out for you, to give you an idea of where that puts us. As you know, I like to compare inventory and solds numbers to give us an idea of, first, about how many months worth of inventory we have on hand on any given month, and then second, what does that mean for us as far as competition? How many homes are getting sold versus how many homes are selling? So that number came out to 13.94 for the month of January in 2009. And what that means is, if the inventory numbers froze where they are and we continued to sell the same number of homes every month, it would take us 13.94 months to sell off the entire inventory. So basically about a year and a month to sell off the inventory we currently have. Thought of another way, that means that for every home that is selling, there are about 13 homes out there trying to get sold. So a lot of competition. Sellers really need to be paying attention to how their home's being marketed and need to be very kind of attached at the hip to their agent to make sure that all the right things are happening. Now, to sort of put this into perspective, last month our number was actually at 6.51, so it's more than it's about doubled since last month. Now, that's not as big of a worry, because clearly that would be a more of a seasonal situation where seasonal things change. Inventories tended to go down in the winter months, but the county is at 8.4. So overall, we're not performing as well as the county is. So if the county's inventory froze right where it is and sales at the county level stayed where they were, it would take about 8.4 months to sell everything off. So we're not performing as well as the county in general, but comparing to ourselves to our own statistics over the past years, we're actually doing fairly well. Now, let's go ahead and take a look at these same numbers just over past months, see what sort of trends we can get out of this. Now, the first thing we'll look at, obviously, is inventory numbers. And as you can see, I've also got another line on this particular graph that gives us sort of the trend of the inventory numbers. And as you can see, it's trended up. over the course of the last year. Now, we're looking back all the way to August of 2007. We can see in January of 2009, we had an increase in inventory from December. It's normal to see an inventory increase from December to January as more homes go into the market that have taken themselves off of the market or have waited to go onto the market until after the holiday season. Now, you'll notice this is an interesting observation to make, I think. If you look back to November, December, January of last year. Now, look at December of last year. You can see that we had a much bigger jump between December and January. Now, the reason for that is because we have a lot more foreclosures and short sales on the market right now. Now, a foreclosure won't go off of the market for the holiday season because there's nobody in the house. It's owned by the bank, and they're usually empty. In fact, I haven't seen a foreclosure that has anybody in it yet, unless they were squatters. So, and maybe that's a story I'll share in my podcast. But anyway, and short sales usually will have somebody in it. But the fact that we're seeing such a minor increase from December to January this year, whereas last year we saw a much bigger increase, I think that's explained by the fact there's just so many foreclosures currently on the market. Now, the inventory change from December to January was an increase of 4.15%. That's 10 more homes in inventory in January than were in inventory in December of 2008. Now, let's go ahead and take a look at the homes that were added to the market. As you can see, the trend here actually is heading downward, which is kind of comforting. If we can get fewer homes added to the market, that will help to take down the inventory, and that is a good thing. We actually saw a 53.19% increase, though, in listed homes between December and January. Again, that is an expected change. You can see last year, same thing. December to January, we saw a big jump in listings simply because we had exited the vacation season and folks were either waiting for January or took their homes off of the market in October, November, and we're putting them back on the market now. Notice we see a much like we did with overall inventory numbers, we don't see as dramatic an increase as we did last year. It's closer. A lot of that can be explained by more foreclosures going on the market, that type of thing. Because remember, these are brand new listings. So the net difference between December and January, it was a 53.19% increase, as I mentioned, but that was overall 25 more homes listed in the month of January than the month of December. Now let's go ahead and take a look at the sold numbers, just so we can sort of get an idea of how many homes have sold. Now, as you can see, the trend here is actually pretty good. We've got a general increase. You can see the gray line that goes right across all of those sold statistic bars. That tells us that sales are actually trending up over the period of time that we're looking at here. Although we did see a decrease in sales between December and January, overall, looking back, the numbers are actually pretty good. Now, sales were down 47.06% between December and January. Well, that's a net 16 fewer homes sold in January than December. Now, let me try and explain this number because it's one of those numbers that while last year we saw the same thing, we saw an increase in sales in December. We saw a much bigger increase in December of this year. A lot of that has to do with deal taking. We've had some foreclosures and short sales on the market for an awful long time in Morgan Hill. So we were hit earlier than a lot of other areas of the county. Normally, this is something I think you'd expect to see. Always remember, though, that the sold numbers tend to indicate what went into escrow the month previous. So in other words, all the homes that we're seeing getting sold in December, folks actually made offers on them in November. So what you'll find is folks who are out to get the deal, who are out looking for those best priced foreclosures and short sales, often will come out in October and November to purchase a home because winter is perceived as one of the best times to purchase a home and get the best possible deal. And so everyone wants to get into an escrow before they get into Thanksgiving or far into November, or at least into the Christmas season. So they'll make their offers just before that time, and a lot of those will hit in December. So that usually explains why we see a bit of a spike in December there. Now let's go ahead and take a look at the less encouraging numbers here for our Morgan Hill market, and this is something I started doing last month. Short sales and foreclosures. This is basically a pie chart that gives us an idea of how everything's panning out. How is the market being segmented as far as what's getting sold? Now, as you can see, of the 18 homes that sold in Morgan Hill, only six of them were sold conventionally. Short sales and foreclosures made up 66% of the total homes that were sold in Morgan Hill. Last month, it was only 54%. 9 of them were foreclosures in January. 3 of them were short sales. Now, in the county, and what's interesting here is we're actually doing better than the county on this particular statistic. 71% of the homes that sold in Santa Clara County in general in the month of January were short sales or foreclosures. And last month in the county, it was at 60%. So you can see there's an awful lot of attention being spent on foreclosures and short sales. What's interesting is if you go and you look at some of those conventional sales, now while some of them are extreme high-end homes, we had a couple of homes sell conventionally that actually skewed our average sales price numbers that we'll see in a few minutes, just because these homes were over $2 million and we happened to sell 2 of them in 1 month. But what's interesting here is that there is action happening on conventional sale homes, and so many buyers are focusing on foreclosures and short sales. I think a lot of folks are missing out on conventional homes that have far more flexibility in the asking price. I know from my personal experience making offers on some of these homes, a lot of these folks may not at the front end be priced as aggressively as some of these short sales or foreclosures. But I'll tell you what, after the negotiation process is done, if you've got a good agent who knows how to negotiate, working on a property for you, I'm finding I'm able to get the prices on a conventional home down at the level of a foreclosure purchased home, because there's a lot less movement that you can get out of a foreclosure or short sale asking price. But the side benefits of being able to get a conventional home are amazing, because usually your foreclosures and your short sales are not in as good a condition or not well taken care of, and usually a lot of work is involved to bring them up to the point where you'd want to actually move into them. So if you've got a good agent, you find one who can do some good negotiating, don't ignore the conventional listed homes. Those can be a great source of a deal where you can buy it, and once it's bought, it's ready to be moved into. It's been well taken care of. It tends to have upgrades, and you're ready to just move into the house. Whereas with one home I'm working on right now, for instance, once this home gets purchased that happens to be a short sale home, there's at least $80,000, $90,000 worth of work that's going to have to happen in order for those folks to move in there and be comfortable in the property. So always keep that in mind. Whether it's you or someone you know, make sure to pass that suggestion along. I think a lot of folks are missing out on sales on homes that are potentially really good buys because they're not looking at anything but foreclosures and short sales. So don't put the blinders on. Take a look at what's out there, and I think you can find some great deals. All right, now let's go ahead and take a look at the home prices over past years. Again, remember, this is just the month of January, going back to 1999. Now, as you can see, we took a big hit in 2008 on our average sales price. I would love to point to this graph and say, look, everything's better. Look, we've had such great supply and demand numbers on this same year-to-year comparison. I'd love to tell you that this 2009 number is exactly right, and yes, we have seen an increase in the average price. Well, unfortunately, because we have such a small sampling of homes, only 18 homes sold in Morgan Hill in January, you'll often find that more expensive homes or one or two really high-priced homes can skew these numbers. So in this case, unfortunately, I think that's really what's been going on. And once I show you what the median is, I think it'll become clear where all the attention's being focused on for sale on the homes that are selling. Now, the average home price actually, according to this, increased 5.74%. That's a $40,725 increase. The average home price was $750,093. Now, the median home price was $555,000. That was a decrease of 19.56%. or $134,975. Now, let's do a quick explanation of why there's such a difference between the median and the average. Now, the average is just the average. You just add up all of the dollar amounts, divide it by the total number of homes, and that gives you your average. What the median tells you is that the home that was right in the middle numerically, so in other words, if we had 100 homes, that home that was the 50th home to sell was just over $555,000. So half the homes that sold were below $555,000, and half the homes that sold were above $555,000. So looking at this graph, your first thought should be, okay, well, the majority of homes that sold were huddled down lower below the average, and that can be explained by the fact that we actually had 2 homes sell in Morgan Hill for over $2 million. The highest priced home in Morgan Hills was on 1720 Jasper Highlands Drive. That home sold for $2.3 million. It was listed at 3.5 originally. Now, what's interesting is if you go off and you look at any, this is kind of an interesting home to point out because it's got some interesting characteristics to it that I think buyers and sellers should be aware of. Now, what's interesting about this home is that if you go off and you look at the numbers for this home that are going to be published, they're going to be different from what I'm telling you. And what I'm going to tell you is that my numbers are right and everyone else's numbers are wrong. And I know that's maybe a little bit of a I don't know, maybe a self-aggrandizing thing to say, but it's the truth, because the bottom line here is that these folks tried to get this home sold way back in January of last year and took it off the market for just long enough to lose the connection, to lose the numbers from the previous listing. That's called relisting. Go to my website, search on relisting to find out what that is, because it's bad and I don't like it. But basically they wanted to do is they wanted to cut the connection between the listing and the old numbers. And the old listing had it at 3.5 million. They then listed it again for about 2.9. And that, you know, unfortunately, that's the way the system works. If you take the home off the market for 30 days, you can lose the connection to the previous data. Now, according to this, the home had been on the market for 320 days. Obviously, it had been on the market for more, and that's the number that you'd see out in the official records that you get. But obviously, we're in we're beyond that now. It'd be over 365 days for this. So it's been on the market for over a year. It finally sold for $2,300,000. It was bought for $3 million 6 months before it was listed in January of last year. So what basically someone did was tried to take $500,000 profit as quickly as possible after they bought the home. Unfortunately, it didn't work out for them. They ended up selling it for $700,000 below what they paid for it. But it took an awful long time to get that property sold. Now, the lowest priced home in Morgan Hill was at 16959 Barnell Avenue. I'm very familiar with that particular street. Been there plenty of times showing homes. And the home sold for $290,000. And it was listed for $269,900. It was only on the market for 11 days. Now, that sold for higher than what its asking price was, but it was also a bank-owned property. So you can see there's still multiple offers out there on some of these foreclosure properties. That's where buyers' attentions are really focused right now. Most folks perceive themselves as being able to get some amazing deals on those properties, as we talked about before. Now, the average price per square foot for homes in Morgan Hill was $289.72. That is up from last month's $287.43. And remember, a lot of that's going to have to do with the fact we sold a couple of over $2 million homes as well. Now let's go ahead and take a look at the same data, but just over past months. This will be home prices going all the way back to August of 2007. And first we'll see average home prices. On this particular one, we don't have an averaging bar there. I apologize for that. But you can see the average price. The trend is impossible to miss. I mean, it's obviously averaging down. That's really the main thrust of this, is we're seeing things on average going down. And then if we look at the median here, we can see that the median is down in January, even from the same time December. I think if we were to compensate for the higher end homes that sold in this particular month, we would see this number actually having dropped from December. To give it a more realistic number, I think it would be more around about $600,000 in that ballpark, $600,000 to $650,000. Now let's go ahead and well, you know what? Let's discuss the statistics here relating to that. Now, the average home price was $750,093, and the percentage change. Let's discuss the percentage change between December and January. That was an increase of 14.15, with a dollar change of $93,010. The median change was down 10.77, with a dollar change of $67,000. And again, the data that we're basing this also off of is a total of 10 homes, or 18 homes sold. So now let's go ahead and take a look at how long it was taking to get homes sold. Now, these numbers tend to get pushed around a little bit by some different economic processes. So let me go over these real quickly. Now, first, the days to sell was down 2.19%. It was taking 3 fewer days to get a home sold in January of 2009 and in January of 2008. And the lowest days on market was 3 days. The longest days on market was 471. The next closest behind that longest days was 320. So for a few homes out there, it took an awful long time to get sold. To sort of break it down into smaller chunks for you, now no homes sold before they were ever even put onto the multiple listing service. Excuse me. 2 homes sold in the first week. 4 homes sold in 80 to 30 days. 1 home sold in 31 to 60 days, 2 homes sold in 61 to 90 days, 4 homes sold in 91 to 180 days, and 5 homes sold in over 180 days. Now, 2 of the homes at the top of that were obviously the 471 day and 320 day. If we dropped the 471 day home, that would give us an average of 108. So what's the real number? If you're a seller here in Morgan Hill, you're interested in listing your home, and you don't have a home that is an extreme high-end priced home, you don't have a home that is an extreme low-end priced home, what's the real number for you? Well, 33% of homes sold in 30 days or less. Given the statistics, including the 471-day property. My feeling right now is that if you have a average priced home in Morgan Hill, you're probably looking at about 60 to 90 days. I think that a realistic number would be about 90 days to get your home sold. It's going to require some aggressive work on the part of your real estate person. I think you need to be very careful about who you're picking. If you want some tips on who the right people are to pick, check out my podcast at my website at www.soldbyrobert.com. The title is how to pick your listing agent. I think there's some good suggestions there. And of course, if you're in Morgan Hill, I always suggest you give me a call. I'm always happy to help in any way I can. Get your property sold as quickly as possible. Now let's go ahead and take a look at the same data, just going back previous months. This is going back to August of 2007, and we can see what it's really a very seasonal situation. We'll get some big bumps in these numbers, and a lot of it has less to do with really how long it's taking to get a home sold, and more to do, this is very much affected by when we see boosts in sales numbers. When more homes sell, we're taking more homes off of the market, and a lot of those homes have been on the market for a very long time, so then we'll see a spike in the days on market. So it's less of an indicator that it's taking more time to sell your home right now. It's actually more of an indicator that right now more homes are selling. And as soon as we start to see sales numbers really increase, for a time period, as we sell off the inventory that's been around forever, we will see an increase in that days on market. Now, the days to sell between December and January was up 10.74%. That's 3 more days to get a home sold in January than in December. Now, I do appreciate you coming out to listen to what I have to say on these subjects. If you'd like to look at any of my other video presentations on other markets that I serve, or listen to any of my weekly podcasts, or read any of my articles on real estate, you can find those at www.soldbyrobert.com. If you prefer to get in touch via email, feel free to send a message to robert@soldbyrobert.com. Or if you'd like to pick up the phone, make a phone call, I'm happy to talk to you about real estate or anything else you might be interested in talking about. That's 408-852-0525. If you prefer online chatting, you can use AOL, Instant Messenger, Google Talk, or Yahoo IM. My screen name is The Rebel Broker. On Skype, screen name is Rebel Broker. And of course, referrals are always appreciated. If you or anyone you know is interested in buying real estate in Silicon Valley, I would be happy to help you out. Feel free to contact me using any of the methods outlined above. And finally, if you are not in Silicon Valley and you could not care less about buying real estate in Silicon Valley, I can still help you find an agent in your local area that is perfectly qualified to handle your needs. So I'll ask them all the tough questions. I'll find the right person. And for a lot of areas, I already have great agents I've worked with in the past that I know take this business as seriously as I do. Give me a call, and I'll be happy to refer you to them. Thanks again. I look forward to talking to you all next time.